What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol GOGO for GoGo Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, we have not yet covered this one on the channel together, so let's come in and give ourselves a daily roadmap, just mapping out obvious areas of support and resistance. Then we'll talk more nuance when we drill down to the 30-minute in just a moment. While we're on the daily and I'm sort of giving ourselves those levels here, I do want to point out that we had a gap up this morning on a catalyst, that there was some sort of raised guidance in terms of financial targets, right? So that's what I'm seeing here from a quick daily roadmap. The other thing I would point out that is broken now, let's actually just do it with this tool. If you do something like this, we did break out up and over this resistance trend line. That means it's obviously no longer in play, but I did want to at least make note of that structural break there from the daily perspective. Let's take a look at the 30-minute now and talk a little bit more nuance. Obviously, the gap in play is underneath us, right? So if we zoom in a bit here, what we'll notice is that we can probably adjust this to today's low. It's so close that that's probably the thing to be watching, if you will. That's at 1386, and if we break 1386, I would argue the gap starts to fill down towards that 1250-ish area. Now, does it happen tomorrow, the next day, the next week, the next month? No, it doesn't have to, but remember, if we come into this area, you need to at least consider that that's the possibility, right? So if it decides to trade all the way back down towards 1386, you need to have that on your radar. In terms of what's unfolding, though, obviously big bullish price action to the upside today, all punctuated by really solid volume down below. So we are going to be looking for momentum continuation, but with the caveat, right, that this has moved a significant amount already, and there could be some sort of digestion move here, so some inside bars up here towards the highs. As long as it doesn't really aggressively pull back and get into that low, I would say fine. Look for some sort of bull flag to form here on the daily for some healthy consolidation, and then boom, taking the break for the next leg potentially higher into blue sky territories, right? So those are my overall thoughts. In terms of how this move unfolded intraday, we'll take a look through the lens of the 30-minute with the Fibonacci's. So from low to high of the first move, what you'll notice, let me just put them on there. You can see the first blue line here is the 38.2. That's exactly where our red pullback candle held, and from there we got rally number 2. So this time we'll come in from the lows and go all the way on up to the highs and just gauge the last little 30-minute session here, and obviously still trading well above that 1627. In the post market, I will say we're slightly lower, or maybe that's just due to the spread. We're currently trading 1679 by 1687, so just still in this zone up here, which is well above still that 38.2. So if you wanted to have an ideal level to hold here on the chart, it would be that, right? So we'll go ahead and throw that on there, and then we'll clean up the fibs, make it a little easier on the eyes, and of course put in today's high. So some scenarios for you. Ideal consolidation holds up in here, again, breakout up and over that 1775 to get into blue sky territories. If we break down underneath this 1628, I would argue it's not so much about this area in here, that 1564. Let's remove that and really just focus on, let's actually do something like this. We'll grab this level. I do think that the back test of this breakout point could serve us as some support at 1532. So again, scenario number 2 would be if we break down underneath the 38.2, watch for potential pullbacks into this zone. I would just treat this as a zone down here, right? So if we start printing hammer candles, if we start printing indecision dojis, right? Anything that would make you question, is this pullback ending? Can we flip long over the highs and then get back up into some of these overhead targets? That would be the place. The other thing that could happen here, and again, if you use it as a zone, something like this, right? So a double bottom could form there, or you could get some sort of inverted head and shoulders, right? Something like this. As long as it happens kind of in this area from that period of consolidation right here, I would say fine. That's still a healthy pullback given the nature, again, of the move that we've seen on today's session. Anything underneath this zone, though, that's where I would start to say, okay, you know what, this is a little bit too deep for my likings. I would start to be a little bit more cautious, remembering that underneath 1386 fills the gap down towards 1260, we'll call it. So more than $1 gap underneath there, which I don't want to be involved in on the wrong side of the trade. So really, unless we get some sort of structural bottom down here that's easy to identify at that 15 zone, then I don't want to be interested, right? I'm not bottom fishing if we break down underneath that 1484. So those are my thoughts here inside of GoGo. Let me also just point out that if we do move into blue sky territories here, it's $1.50 intraday levels that do form now that we are trading above 15. Those would be upside targets. So that's going to wrap up the video this time for real. If you enjoyed it or learned anything new, definitely let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.